Today we are joined by William Lowe and Ian Fulton, the portfolio managers of the Nikko AM Global Share Fund. As two of the 6 portfolio managers with the Nikko AM Global Share Fund, can you tell us a little bit about the history of Nikko and your background?
Okay, first of all, let me start with the history of Nikko. We have a team running global equities that has been together since 2011. We've been operating and very successfully managing global equities since that period. And the team joined collectively together in 2014 in terms of joining Nikko Asset Management. And we've continued to run a range of global mandates since then very successfully. My own personal career, I started back in 1987, originally as a Pacific Basin manager, spent many years doing that, laterally moving to run international portfolios for US clients up until 2011. And that's exactly when I joined and built the team along with my colleagues at the previous employer and ultimately joined Nikko today.
Ian, can you tell us a little bit about your background?
Yeah, sure. I started my investment career in 1996, so almost 20 years ago. Spent the first 3 years covering the US market as an analyst, and then for the last 17 I've been a portfolio manager covering global equities.
You have an experienced team in place and a consensus-based decision-making process. Before we delve into portfolio construction, how do the portfolio managers work together?
Well, one of the things we've learned of having between 2 and 3 decades of experience managing money, we've learned one, a team-based approach is distinctly more powerful than a hierarchical single individual. So everything that we do in terms of how we run our money today is about embracing 6 very experienced portfolio managers collectively working together, which we think in that model produces an outcome that is better, is less fallible, and is likely to manage money for 52 weeks of the year rather than one that would be more reliant on one person who, funnily enough, isn't in the office for 52 weeks of the year.
I would like now to spend some time on the research process behind Nikko with a particular reference to the Nikko AM Global Share Fund. Can you explain to investors the investment objective of the fund?
Yeah, we're targeting 3% outperformance relative to the MSCI All Country World ex-Australia benchmark on a rolling 3-year basis.
Can you talk through the investment philosophy behind your strategy?
Our philosophy is to deliver to clients a concentrated, high conviction portfolio of future quality companies. Companies where we think the growth, the returns and the management are not reflected in the share price today. To do that, we do 2 simple things. We use the wealth and experience of our team members to seek out in a free-thinking way those businesses that fit those criteria wherever they are in the world and build and execute very efficiently those portfolios to deliver the performance target we described earlier.
You manage a concentrated portfolio of 40 to 60 stocks. How do you select stocks for the portfolio?
Yeah, it's very much a team-based process and it's a culture where we've got trust and mutual respect. So from an idea generation point of view, we do have a kind of free-thinking approach and the experience that we have on the team, and we rely on the individuals to use their great insights, their great knowledge and experience to come up with these interesting investment ideas. But set against that, we've got a very disciplined research process. When we're looking for the future quality returns in the businesses that we're investing in, we need to understand the capital allocation decisions that the companies are making. So we've got a very detailed research template where we forecast a 5-year P&L, balance sheet and cash flow, and that P&L, balance sheet and cash flow are linked together so that we can't grow a business without allocating capital. Because when you're looking for future quality returns and those returns on investment that aren't fully appreciated by the market, then we need to understand the decisions that management are taking when they're allocating that capital. So they're the key ingredients, and we've got a very disciplined research process around that, and we research about 100 to 150 stocks in that level of detail. But then when we get to actually creating the portfolio from that, we've got an objective stock ranking process that each team member participates in, and that gives us a very clear view of what our highest conviction ideas are and how they should be weighted in the portfolio.
What are the main factors that leads the fund to selling a stock?
As we've already mentioned, we do have something called our ranking tool, which is all about recognizing all the ideas that we've thoroughly researched. Not all of them are necessarily equal in basis, but what we do is a very clear process around about every month we refresh our views, the degree to which we think there's upside, we have conviction in that upside, and the degree to which that research idea is correlated with others in the marketplace. And by using that process, we're constantly refreshing our views as a team, which are the best ideas. So the best ideas are ideally the ones that we weighted most highly in the portfolio. But equally, when we bring new ideas to the table and finding sell candidates to make way for better ideas, again, we have a very good method of comparison to allow that process to take place. It is really the normal process most portfolio managers go through, but we are clear, we are explicit, and we're transparent to ensure that we have a team-based approach for doing it.
What is the investable universe, and how do your portfolio managers cover this universe?
Yeah, so covering global equities is a very large task. You know, there's probably 5,000 companies that we would recognise as investable potential. You know, for 6 people, that's impossible to cover in full detail. So, as we've said, we're really reliant on our experience and our ability to work together as a team and use that experience to join the dots on our collective insights, our individual insights, our interactions with people within the industry that we're looking at to really come up with interesting ideas that are future quality and that have the quality of returns that we're looking to get in the investments we make. So that gives us a process where we'll take about 100 to 150 companies that we'll research in full detail that are interesting and have the future quality characteristics that have the potential to make the returns we're aiming for our investors, and we'll research those in that level of detail to begin to filter down the universe in that way.
Being a concentrated portfolio, how do you manage this risk?
Our job is to take risk. Our job is to take risk in terms of having a portfolio that's got nothing other than lots of exposure to businesses we really like, and hence the high active share, high conviction nature of it. But we do always want to make sure that we understand the unintended risks that result from these groups of future quality companies we build together. And we have the risk models in place to help us identify whether there's factors that we're overexposed to that are not aligned with our general thinking of bringing the portfolio together. We will use that to always ensure, therefore, that we will deliver a portfolio that is very much the risk is concentrated in stock specific, i.e. our stock picking skills, and that is what's going to drive the excess returns that we're looking for, as we mentioned earlier, of 3% per annum.
Your strategy can have a broad allocation across the globe. How do you manage currency risk within the portfolio?
You know, I think currency is a very challenging thing to manage, and actually it's a residual output of our process. We think about currency when we're forecasting the future returns of the businesses we invest in, and obviously if there's an extremely volatile environment, it will be a consideration, but it's really an output of our process rather than something we would consider upfront. We think over time, you know, value will accrue to investors by considering the positioning of the business, the future quality of the management and the decisions that they are taking, and understanding the valuation of the investment that you're making and whether those returns are fully appreciated. And that actually over time will tend to outweigh the impact of currency in the near term.
The strategy characteristics include active share of 80 to 95%. Can you explain what this means to investors?
Just very simply, active share is the degree to which you're not just replicating positions in the benchmark. So for us, typically, in the last 5 years, our active shares ranged between 90 to 95%. So in essence, we're building high conviction positions in the portfolio, and that's all we do. We never have any positions in the portfolio which are underweight versus a benchmark. What we're delivering for clients is our stock picking skills, and we want to make sure every one of our positions is a stock pick and as a weighting and goes accordingly.
What's the recommended time frame for an investor, and how does this relate to your investment philosophy?
Yeah, so our performance objective is a rolling 3-year basis. In terms of how we look at companies and the future quality of returns, we're forecasting that on a 5-year view. So I would suggest a 3 to 5 year holding period might be sensible.